pros and cons of owning rental property, and a site that makes buying a rental property as easy as ordering off Amazon. Hey, I'm Rebecca. Thanks for joining me on the Mama Lorian Way, where I'm documenting my journey for financial independence from being a mom to being an investor. If you like this, if you like the channel and the content, please subscribe, push the like button, share, everything helps. So today, let's talk about some passive income in the form of real estate, cash flow, and rental properties. So rental properties, most everybody gets understanding of that. You have a house, maybe you have been a renter, maybe you own a place. And there's definitely some upsides and some downsides to having rental property. Real estate is consistently in the portfolio of wealthy people for a reason, because it performs across time, it performs well, and it creates long-term wealth. Good stuff. Number one, people always need somewhere to live. Population increases, people are moving, people are having babies, they need somewhere to live. And it's tangible. You can touch it. You can go feel it. You can see it. It's not in your imagination. It exists. You can leverage other people's money. It means you don't have to have all the money to be able to buy the property. You can go to the bank or to a lender and borrow, 100% of it, 80% of it. So if you had $100,000, instead of using it to buy one asset, you could split it across 5 by leveraging other people's money. There's a big variety: single family or regular houses, Airbnbs, short-term rentals, duplexes, multifamily, mobile homes, you name it. Where people live, you can own that property and rent it out. And there are multiple ways that you can see income. Appreciation. So that just means when you buy a property in 1950 for $20,000 and you sell it in the year 2000 for $500,000, it's appreciation. It gets more valuable over time. And a lot of times it's pretty much in alignment with inflation. So at least your money, keeping up with inflation. And that's a good thing. Cash flow. If you have money left over at the end of the month or the end of the year after all your expenses, you might have a little bit to put in your pocket. Paying down of your loan. This is an interesting one because we kind of sometimes forget about it. But in our loans, big portion of it is interest and a little portion of it is principal payment. And say you have a loan that every month $100 pays down the principal. At the end of the year, it's over $1,000 that you are building equity. That's extra money that you'll get to take out of your house once you sell it or maybe refinance. And then I want to talk about some tax benefits. I am not a CPA. I don't play one on TV. I'm not giving tax advice. There's your disclaimer. Depreciation is one big thing people talk about. Depreciation, as far as the tax code goes, is your purchase price of when you put it into service as a rental divided by 27.5, and that is a number IRS comes up with. Then you can subtract that number from your yearly income. So for example, say I bought a house for $200,000. Divided by 27.5 annually, it's $7,272 that is basically tax-free. So say I receive $30,000 in rent. That first $7,272 is tax-free, so only $22,728 is taxable. That's kind of like extra money in your pocket. At some point, though, you will have to recoup. It's called recouping depreciation. There's another way that you may be able to delay those taxes called 1031. If you sell your property, you do have to pay taxes on the amount that you were depreciating. But if you reinvest within a short amount of time, and it's pretty short, it's less than 6 months, into an equal or greater asset in real estate, you can keep that money working without paying taxes. So you have a greater chunk of your money that you're able to leverage to be able to have your money continue to work for you. Well, if it's this easy and this great, why isn't everybody doing it? Well, it's tricky. It's because cash flows both ways. Income, nice. Expenses, kind of part of it. So you have your debt coverage, meaning your loan payments. You have taxes. You have insurance. You have maintenance, management fees, and times that your property is not rented out. You're still having to pay for those. And I've had years where I was like $5,000 or $6,000 in the hole on one house because of re-roofing, repaving, and I swear every appliance went out in that same year. So the not so good stuff, tenants and vacancy. Good tenants, it's awesome. Good tenants are like gold. Bad tenants, they're the opposite of gold. They will cost you money, give you headaches, and maybe destroy parts of your property. Not as bad tenants, but zero tenants, no tenants is bad too, because you're still having expenses with no income. And then there's the maintenance. A lot of people talk about the broken toilets in the middle of the night. Well, I talk about the re-roofing, which costs like $5,000, $6,000, $20,000. Your air conditioning in Texas, if your AC goes out, you'd be very willing to pay $6,000, $10,000 to fix that sucker. Repainting. And every year taxes are going to go up and your insurance is going to go up. If you want to get out of the property and you need the money for your life, it takes time to get out. Management, I'm just going down the list. Management. Either you're managing or you're paying somebody to manage. You can pay 10% of your rent to a management company if that's gonna, this is my kid. So it takes a little bit out of your pocket, but maybe takes the worry out. Cash flow, a lot of times it's less than you think because of all the things, all of the above here. And then finally, a lack of inventory in your area. Lack of, just use the stock, I see this parrot. There's this thing called the 1% rule. And for an investment to be considered a good rental investment, it says that the rent received monthly on a property should be at least 1% of total purchase price of the property. In real terms, it means if you pay $100,000 for a property, you should expect $100,000 monthly rent for that to be a good investment. I live in Austin, and the median house prices are skyrocketing. They are well over $400,000 for a single family. But the rents for similar houses like that, $2,000 or $3,000. It is not likely you're going to find a property that would be considered a good investment under the 1% rule. What would you do? You're going to have to look in other markets. Well, I'm in Austin, and I may not have the wherewithal, the time to go look in another market. And as a disclaimer, it's not for everybody. Being a long-distance landlord, I'll say it again, is not for everybody. However, I have found a site, roofstock.com. It's almost like buying real estate off Amazon. You can make an account, but I'm just going to browse as a regular user. So they're properties, and they're not in every state. They're in Alabama, Georgia, Texas, some locations in Texas, Alabama, Pennsylvania. So pretty many. Right now they have 389 properties, and you can go to here. They respect the 1% rule and look for properties that follow the 1% rule, filtering, showing properties where monthly rent is at least 1% of the list price. And here we have one in Memphis, Tennessee, $65,000 to buy, $990. Click on that. And you may not live anywhere near Memphis, Tennessee, but you can have Roofstock vet the property. They're all vetted, income producing, and if they're not already rented, Roofstock has a 30-day renting guarantee that they will find somebody to put into that property. They also have affiliate programs with loans and insurance and property management as well. I have noticed when I look at these list prices, and I'll go back to the property, I've done some due diligence looking and comparing what like the Zillow price, the Zestimate. These seem to be a little bit higher than what market estimates would be, but that was with built in. They have been vetted, they've been inspected, they have renters. It's kind of a one-stop shop. I have no affiliation with Roofstock, just so you know. But maybe check it out if you are looking to buy something that would be one of many or one of one properties. Have a good one. I'm Rebecca. Thanks for joining me on the Mama Lorien Way.